Good afternoon, traders. This is Christian from Hertz Trade Trade Group, and it is Tuesday, March 1st. So first day of the trading month. Really not great price action for the first day of the trading month. Not what we're kind of used to when you see, new first trading day of the month. Typically, there's some new money being put to work, but it didn't really seem like that was the case today. And whenever we're analyzing something like that, when we're talking about, hey, it's usually first of the month flows that we see in the market, right? Keep in mind, that's just one thing. Obviously we've got a lot of things going on in the tape. We've got this big conflict going on right now with Russia and Ukraine, and that's just that's adding to more uncertainty. We also have companies coming in every 2 seconds and saying that that they're no longer providing products to or services to Russia. So this is a complicated situation, and it's bigger than just saying, hey, I don't understand what's going on today. There's supposed to be, the market was supposed to be up because the first of the month flows were supposed to happen today, right? So obviously that is just one of the things that could have been the driver for the market today, and it certainly wasn't. Risk disclaimer in front of you. I haven't mentioned that yet. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're talking about is for education purposes only. One other disclaimer that I should probably adding to my videos is that most of what I'm talking about here is for trading, right? It's not really investing, right? I talk a lot about trend trading in these videos and following the trend and moving averages, and all of those things are for basically, for, I don't want to say short-term trading, right? Because I do all different types of swing trading, but the time frame is a lot different than if you're long-term investing. So sometimes I get questions regarding, well, what do you think of this stock for the long term? It's a little bit different for the long term. So our strategy is much more shorter term than the long term, right? For a trading account. So let's just jump through the price action really quick. Some of these things probably should be highlighted in red that they're not. But when we look at the performance for the day, I'll zoom in a little bit so it doesn't hurt your eyes. SPY was down 1.6% for the day. Qs are down 1.5%. IWM down almost 2% for the day. So kind of just the price action is not really anything new. We've been experiencing higher than normal volatility now for a while. I sent out a tweet the other day talking about that there was only one day in February where the VIX wasn't above 20, right? And most of the month of February, the VIX was above 25, right? So we're just in a higher volatile time, and that needs to be straightened out. Normally these things don't get straightened out in a day, and to see this volatility linger for as long as it has, it just tells us that there's a lot of issues going on right now in the market, right? There's a pretty decent wall of worry, even before the geopolitical conflict that we've got going on right now. Even before that was going on with Russia and Ukraine, things were still pretty dicey, right, in the market. So this is compounding issues. And when you've got this many things going on, you kind of have to put your if you're a retail trader like I am, right? And of course, I was an institutional trader for a long time, but you kind of have to think about, right, the funds that are moving the market. What are they doing right now? We've got a Fed meeting in a couple weeks, right? And I think Powell speaks tomorrow, right? So with all this uncertainty, right, do you think big fund managers are putting a lot of money to work right now? Or do you think that they're kind of sitting out a little bit and just watching what's going on with this market, watching how it's developing? So I just kind of put that question out there, right? So when we look at some of these other things too, so I want to talk about the S&P chart for a minute, and then we'll get into, this is going to be more of a macro video today, considering that the volatility is way over 30, right? We're at a 33 right now in the VIX, right? So when you have a VIX that's above, even above 25, right, but above 30, right, you have to talk a little, in my opinion, talk a little bit more about what the indices are doing, because correlations definitely increase, right? Stocks start to move together as a group when you've got this type of level of volatility. So I will talk mainly about kind of bigger picture, and then we'll talk about a couple stocks that I'm watching at the end of the video. But for most stuff, we're going to be talking about the indices and maybe a little bit about what bonds did. But you could kind of see just the pattern of what we did here on the S&P. I'm starting very short-term time frame, and then I'm going to scale out here in a minute. But you can see that this was a pretty choppy day. We just kind of started down. Once we kind of broke value for the day on this 5-minute bar, which is at 11:30, there wasn't really much to do with this price action. Right. I just dialed back some risk and just kind of watched, put on a little bit of a hedge for the day. I think I took it off somewhere in the afternoon and then just kind of watched. Just didn't seem like there was a lot to do today. 1 hour chart. We talked about this yesterday, how we hit the top of value. I thought that was a pretty good signal for the day. And we're kind of struggling with that a bit, right? The top of value at this point. So 43.78, right? And again, I put these levels out there. I've been doing it a little bit more. I put them out in the trading room every day, but I've been putting them out on Twitter a little bit better, a little bit more often, so that you get an idea of where there's resistance using volume at price, right? So things get very sticky when you get to the top of value, right? And if you don't have good, strong volume, right, to kind of break through resistance, you often see a fade. Now we're not at the bottom of value yet for the week, but we're kind of right in the middle of it. So when you see something like this, right in the middle of the value area for the week, the price action, there's just not a lot of edge. So you're going to hear me probably say that a couple times in this video about whether or not you have trading edge right now in the market versus when you don't. Also note that we're a little bit below this 200 period moving average, which I kind of define the short-term trend. So right now we're below. All right. But we're very close to, we could move back above in the overnight session, right? That's how close things are. Now, when we look at the daily chart of the S&P, there's a couple things that jump off the page to me, right? So we're in a new month, right? And we've got a new value area, which is highlighted. Again, if you're not familiar with how this works, the value area is based on last month's price, volume, and of course, time, right? The time is the monthly period, right? So this will be the value area for all of March based on the February price action. But you could see 43.29.50, right? I want to see at the very least, price to get into stay into value. All right, so that's the one thing that I mentioned. There's a few things that jump off the page. That's the first thing, is that we closed below value. That's a no-no for me. Right? I do not want to see that. Now, we're not that far, right? And we could get back above it. But for now, I'm playing very conservative in this market. Right? Number two, right? The second thing that jumps off the page to me is that we are still, and I've mentioned this now for a few days, so we've had this nice bounce for the last couple of days. I kind of think it's was a bit not crazy oversold. The market didn't get way oversold, but it was an oversold bounce. Now that bounce is complete, and the thing to realize here is, number one, we're below the 200-day moving average. Number two, we're below the 20-day moving average. Number three, we're below the 50-day moving average. Why is that important? Because it gives you a sense of whether or not this market is a little bit weak or strong. If we're below those moving averages, we've lost the uptrend, right? And we have not been able to retake that uptrend. We've never, since we back on 113, 114, whatever this was, in the middle of January, once we broke below the 50-day moving average, we have not been able to retake it, right? And we've been trying to kind of figure out direction at this point. So it's just a lot harder to read when you've got something like this going on, right? We've lost the uptrend and we're trying to fight, and retake it. But these bounces are getting weaker and weaker. So for now, and again, I'm not saying that this move is done, but what I see, and I think the third thing that jumps off the page to me, right, which is also a negative, is that the other thing is, since we made a high back on January 4th, here's the next time that we've tried to come back we made a lower high, which is the first lower high. Back in here, right? And I guess you can kind of say this is equivalent. This was February 2nd. This was February 9th. We made a lower high. So, you know, the attempt to kind of come back and retake the trend is being met with not really being able to get over that previous peak. Then again in here, which was 216, right? That's the last time that we hit a high. Notice the pattern here. That's also lower than this, lower than this. So for now, right? And this is just, you know, this is just the other day, you know, and that's kind of what I'm watching here closely is whether or not this is going to be another lower high. And are we going to kind of come back and move down in here, right? And I don't know the answer to that question. No one does, right? But I know how to respond to it, right? And that's what technical trading is all about. And having a trading plan and being a risk manager is knowing that this is not, and one day is not a trend, which is very important, but we're not moving in the right direction. Now, again, I could come back in tomorrow's video and be a lot more positive if I see that price is getting better, right? But it's not. And then when you look under the hood, right? And so again, so this is the start of the day. I said, hey, if we could hold 43.29, okay, maybe, you know, I'll be optimistic with that. But we closed below, and we'll see how this goes for the remainder of the week. But I wouldn't be surprised if we make a move back in here, right? I also, you know, I would be pleasantly surprised if we can retake the 20-day moving average, because that would be, you know, first things first is, you know, when you're fighting back like this, you know, you have to start retaking some of these things. So I'm not, you know, I think if we can kind of hang in here a little bit too, that's not a bad thing either. But, you know, again, I'm not making any predictions here, but the one thing that I'm doing is being very defensive here, and sitting with a bigger than normal cash balance until these things look a little bit better to me. Okay. Also, when you look at the hood, under the hood, right, and you look at the advancing versus the declining names, right? So again, the price action is always price action in the trend is always, you know, top of the list for me, because price is always correct, right? You could argue as much as you want with price, but it's always correct, right? So that's the most important thing to me. What I also like to do is kind of take a look at what market breadth has been doing, right? And, you know, of course, this was a negative day, so you're going to see a lot more declining names. But if you look at the advanced decline line, right, this should give you a sense of like the strength of or the weakness that's going on underneath the hood, right? And this is not this has not been strong, right? When you look at the advanced decline line for NYSE, even worse when you look at the advanced decline line when you look at the advanced decline line for NASDAQ, that looks, you know, pretty ugly. And this is what it looks like on a 5-year time frame. So this is a bad picture, right? So things need to get better. So you will see me you know, when the market is acting better, you will see me put a little bit more money to work. Or even if it's choppy, right? And if we held the value area for the day, I would probably have left some trades on to say, okay, you know, the price action is chop. It's not really a reason to take exposure off, but the compounding feel of that, we just haven't been able to kind of reclaim any of these moving averages, coupled with the fact that we could not stay into value for the day, was the reason why I took off some trades. So if you look, I was a seller in the beginning of the day, right? Took profits in a couple trades, and you know, this is something that I talked about in yesterday's video, but you could see how I've been positioned for the most part. I've been in a lot of commodity type names, a lot of steel names, you know, things that either steel names or you know, metals, mining, as well as energy, right? That's the majority of the names that I've been in because they've been acting so well. But on the other side, you have to realize when things are getting a bit overbought to the upside. And you could see if you go through some of these candles for the day, and we'll start with the ETF for metals and mining, but this actually reached my upside target. So, you know, I wasn't expecting this to happen so soon. And it could digest here a little bit, but I've said before, that VPOC, that red line, right, was my upside target. So it's great to hit that, right? And some other things that we've talked about, like in RS, Reliance Steel and Aluminum, right? This thing made a huge move, but you could see the type of candle for the day, right? It went higher and finished down on the day, down 2%. It's not a great look to this. Now, what I normally say with this type of price action is that's a very ugly candle, but the positive is that you didn't lose any of the trend in some of these areas, right? So, but they did not close. But so I kind of take it as, hey, that might be a reversal bar. It's a place to kind of take some targets in some things. CCJ was another one that you just saw in the trade blotter that I took off in the beginning of the day. You just can't be greedy in this market. It closed at 24.45, which is not bad, but hey, I got 25 on the open. CPE was another one that I talked about in yesterday's video. Why am I selling into that? Right? Because that was my upside target. Right. So it's great. This was a nice little trade that I put on yesterday. But right around $61 was my upside target. Now I'll watch to see if price can get above it. But in this market, right, for as choppy and trendless as this market is, I just take the money and I've talked about this the last couple of weeks. Just take the money and put it in your pocket for now. Especially you can't, given the direction that we're seeing, one day up, one day down, 2 days down, 1 day up. I don't mess with it, right? Normally what I would do is, if we were in a nice uptrend, is to keep a portion of that trade on. All right, Vail is another one. Took my second target in that one. I tried a dip trade and a name that I talked about, I think, in yesterday's video, but it just didn't look like it was going well, so I took it off, right? Again, this market all about, small losses, right? I don't want big losses. I took off another trade that I put on about a week ago that wasn't working, just decided to kind of bail on that. Also Tyson, decided to get rid of that one. So again, this happens from time to time. Another concept that we talked about in the trading room today was that, I don't want to just sit and accumulate trades that are not working or that are not doing much. Right now is not the time to be complacent and just to sit with trades. Now, this may work out. It took out this VPOC here at 94. Here's the chart in this one. I mean, it actually looks okay. But again, I'm just being conservative, looking at the overall market. All right. Qs, you don't hear me talk too much about the Qs. Because they just have been acting weaker. Now, they did stay inside value, right? NASDAQ futures, but and I think that they acted, when I looked under the hood a little bit at some individual names, some of them acted a little bit better, but still, this chart I can't get bullish about, right? So 13,925 would be a level to watch, or if you like the Qs, 340, right? Would be the level to watch. So that's a good thing. They did close inside value, but there's nothing really much else to say that there's anything positive going on here. We haven't even gotten to the 20-day moving average really, and that needs to be overtaken, right? IWM, I was singing IWM's praises the other day because it finished better than S&P did. This actually doesn't look horrible, other than the overall trend is down, but it doesn't look good either, right? So it's not below value, and that's what I mean when I say it doesn't look horrible. It's still inside value. 197 would be the level to watch for support. Resistance is 204, right? So I basically just will act a little bit more patient. We realize that we've got a lot of things going on. Like this is a very complicated market with what's going on in terms of this conflict, right? We don't know how this is going to, nobody knows how this is going to shake out, right? And I think, you kind of get this maturity as a trader over time that you just realize that things are too dicey in the short term, and especially considering that these technicals look like this. So I talked a little bit about a couple sectors, metals and mining, crude. all the way up to 106. So wow, look at this. We actually took out all these VPOCs. So I'm going to say it in this video, and you can make fun of me if it doesn't if it doesn't work. But crude took out all the upside targets that I was looking for. I've talked about 101 quite a bit because that's the VPOC that was taken out here. But I think that this move, this is a huge candle after I don't want to say the end of a trend. I got to be careful with that, right? But at this point in the trend, I don't know. Is this a blow off top? It could be, and that's why I got out of things like CPE. I took a target in Exxon today. I did not get out of that trade, but I feel a little bit more comfortable holding in Exxon versus one of these smaller drilling type companies. So again, I did take a target in this. Anything else that I did, we'll talk a little bit about the precious metals and we'll talk about bonds, but yes, for me, crude, if it goes higher, so be it, but it is hitting all my upside targets. We've now retraced all these levels. Again, virgin point of control, it's an area of high volume that has not been revisited, and we've now taken out the last one, right? So I think the move is pretty mature. I would be expecting some digestion here at the very least, but clearly oil is moving on, what's going on politically. So who knows if that changes. But for me, that's, my system, and I'd be a seller a little bit into the strength. All right. Not into, again, I'm not taking off everything. I mentioned Exxon, by the way, not a great sign. This did not close above value, right? I was looking for a close basically above 80. Didn't happen. So again, I took a target right at that level. All right. And then of course, bonds. So what are bonds telling us, right? Big move up, and this is the long bond futures, ZB. You could also look at TLT, which is a different duration, but still gives you a sense of what the long end of the curve is. Remember, the Fed, when they talk about raising interest rates, is the overnight rate, the short-term rate. What we're looking at here is the long end of the curve, the long bond. Notice that this has been a huge move over the last 2 weeks. So this is now up to the 200-day moving average. So it's not a bad thing that, in my opinion, that rates are going lower, right, on the long end of the curve, right? 30-year. I could bring this up just to give you an idea. When we look at the interest rates here, we're going to bring up the 30-year, right? And I want the, let me close this, right? So we're at 2.1. Notice where we were just a couple of weeks ago. We were about 2.35. This is the percentage rate. This is the interest rate, right? So inverted to the bond price, which is the Thinkorswim chart behind you, right? So that's the move down in interest rates. So that should give a little bit of relief to growth areas of the market. But again, it's indicating a flight to safety right now. Right, people are running into bonds right now for safety. Right, that's what that chart is indicating to me. Okay. Also, I want to look at this weekly chart. We are back inside value at this point too. Remember, we started the year breaking down. We are now back inside. So again, that might help a little bit, but maybe not right this second. Last thing to look at is these gold and precious metals, right? So I mentioned with the chart earlier with what was I looking at? Right, I was looking at a couple things that made the big big move on the for the candle, but kind of settled back. Gold is a good example of that. Ugly looking candle, right? But it spent one day kind of consolidating and is moving back up again. So that is now above value. That was the only thing that I ended up doing other than put on a little bit of an, I did put on, where is this trade? Some tech. I was a little late on that, so I didn't put it on in any decent size. And the precious metals, WPM. Right? I've been looking at this for a while, and sure, I don't mind having a trade on in the precious metals right now. That is, again, I kind of stick with what's trending, right? And kind of, add a little risk in there where I see things moving. So this thing closed right on the highs of the day. This is precious metals Wheaton Precious Metals. Used to be called Silver Wheaton, had a different symbol to it, but here's the move in silver. So for now, we've got a little bit of exposure on that and not much other exposure. With everything falling, right, and the banks getting hit as hard, hit hard as much as they did today, right? They're looking very weak here. They're back below the 200-day moving average. It's funny because just a couple weeks ago, I mentioned how I think this may have been in a weekend video. I was talking about the banks were holding up well, but we're not showing any upside momentum. They're just kind of stagnant. They were above the 50-day moving average, but it didn't look like they were tradable to the long side. Well, interesting. Right now, you got a decent move down. Right, so it'll be interesting to see how this kind of plays out. Obviously, interest rates not going to help them on the long end of the curve moving down. Right. What I would be looking at is, in the coming days, is something like an Expedia. Right. On days like this, when everything is down, right, I always focus on the relative strength. Right. Expedia looks stronger than the overall market. Why? Because it's above the 200, it's above the 50-day moving average. So I've got a level to trade off of. So I did not put it on a trade today, but it'll be something that I'll be watching tomorrow. Right. And that's kind of how it goes for days like this and with this market. Going back to what I said in the beginning of this video about understanding what the index charts are telling you, understanding what the VIX is telling you. There's times to be putting a lot of money to put to work, and there's times that there's not. I think this is one of those times for now that is not, and we'll kind of revisit and we'll go through some setups, but we'll see how this 50-day moving average kind of holds up, and really, there's a few other names that I'm watching too, but I think watching is the key word right now. All right, so we'll stay tuned to see how this week goes. It'll be very interesting to see how this conflict, gets resolved. I hope it gets resolved in a good way, where there's less overall damage to everybody. I think you have to kind of pray right now for people and hope that this conflict ends sooner than later. All right, so that is it. There's one other thing that I was going to mention too, but yeah, I mean, sometimes with this market too, understanding, I know everybody wants to trade and put on, find the setups and so forth, but there's certain times where it's just not a good place. And if you can avoid, we certainly talked about this in the beginning of the year too, avoid getting a big drawdown when the opportunities are not great. That's what it's all about. Another thing is try to, I see too many people on Twitter, and again, I'm not criticizing anybody, but too many people get real bullish and they get real bearish. I think if you can kind of stay in the object, I think as a trader, is to analyze what's in front of you. Look at the price, look at the trend, look at the indicators as we're doing, and come up with an opinion, right? Not a prediction, but come up with a view, an opinion, and be able to kind of trade that in your system, have a stop price before you get into a trade, and then kind of go from there. But I see too many people getting, after like one day of price action, getting way too bullish, or to the downside, getting very bearish. Right? Just make adjustments in what you're doing, move with the market accordingly. And when it sets up a little bit better, that's when you deploy a little bit more money into the market. All right. And you have to be again, in my opinion, you have to be flexible. When something happens that you didn't anticipate, right, you deal with it. All right, guys, have a great night. I'll see you tomorrow.